Have you heard the latest news about Paytm Payments Bank? The digital payments giant is facing a significant hurdle as the Reserve Bank of India, or RBI, has imposed restrictions on its operations. The RBI's stern action stems from Paytm's alleged violation of banking norms and non-compliance with supervisory concerns. The reasons behind this ban are multifaceted, ranging from anti-money laundering lapses and related party transactions to non-segregation of customer funds. The RBI has ordered Paytm Payments Bank to stop offering its core services, which includes accepting deposits, issuing prepaid instruments, wallets, and providing services like fund transfers and UPI facility. This restriction will take effect from February 29, 2024. However, Paytm customers can breathe a sigh of relief as they are still allowed to withdraw or use their balances up to their available balance. So what led to this drastic step by the RBI? The RBI's decision isn't arbitrary, but based on several identified issues. So why exactly did the RBI decide to take such a drastic step against Paytm Payments Bank? It turns out the reasons are quite serious and rooted in regulatory concerns. Firstly, the RBI identified lapses in anti-money laundering protocols. These lapses could potentially allow illegal activities to use the platform, undermining the integrity of our financial system. This is a serious violation that no regulatory authority can overlook. Secondly, there were issues with related party transactions. These are deals between two parties who have a pre-existing relationship, which can lead to conflicts of interest and unfair practices. The RBI found that Paytm was involved in such transactions, which is a clear breach of trust. Thirdly, Paytm failed to segregate customer funds. This means that the money you deposit in your Paytm account wasn't kept separate from the company's own funds. This is a major concern, as it could put customer money at risk if the company faces financial difficulties. Additionally, Paytm fell short of maintaining the minimum net worth required by the RBI. This is a measure of a company's financial health, and falling short of it can indicate potential instability. Lastly, the RBI found that Paytm had not appointed independent directors to its board. This is a key requirement that ensures a company is managed in a fair and transparent manner. With such violations, it's clear that the RBI had ample reason to take action. This move underscores the importance of adhering to regulatory guidelines and maintaining a high standard of operation for financial institutions. It's a stark reminder that no company, no matter how big or popular, is above the law. With such violations, it was only a matter of time before the RBI took action. The impact of this ban on Paytm's core services is quite significant. Paytm Payments Bank, a major player in India's digital financial landscape, has been ordered to stop providing its primary services. This includes accepting customer deposits, issuing prepaid instruments, digital wallets, and more. The ban extends to services like fund transfers, Aadhaar-enabled payment system, immediate payment service, and the Bharat Bill Payment Operating Unit. Even the popular UPI facility will no longer be available through Paytm. This comprehensive ban will take effect from February 29, 2024. But there's a glimmer of hope for existing Paytm customers. The RBI has allowed them to withdraw or use their account balances without any hindrances up to their available balance. They can also access their transaction history and statements through the Paytm app or website. But that's not all. The RBI's action extends beyond Paytm Payments Bank. It has also instructed the closure of nodal accounts belonging to Paytm's parent company, 197 Communications and Paytm Payment Services. These accounts have to be closed by the end of February, and any pending transactions need to be settled by March 15th. This ban is undoubtedly a massive blow to Paytm, which boasts a user base of over 100 million KYC verified customers, 300 million wallet users, and 30 million bank account holders. It's a rough patch for the company, but they are determined to weather the storm and come back stronger. But what does this mean for regular Paytm users? Well, the immediate impact will be a disruption in their digital financial activities. However, the long-term implications will depend on how swiftly and effectively Paytm can address the issues identified by the RBI and restore its services. Until then, Paytm users will have to find alternate digital payment platforms for their financial transactions. If you're a Paytm user, you might be wondering what happens next. Well, the impact of this ban is certainly not insignificant, but it's not the end of the world either. Here's what you need to know. Despite the restrictions, you can still withdraw or use your balances without any restrictions up to your available balance. This means that if you have money in your Paytm wallet or bank account, you can still use it for online transactions or transfer it to another bank account. You're not going to lose your hard-earned money, so there's no need to panic. In addition to this, you can also access your transaction history and statements through the Paytm app or website. This is a crucial aspect, as it allows you to keep track of your past transactions, ensuring you have a record of your financial activity. So while you may not be able to add more money to your Paytm wallet or account, you can still manage what is already there. However, it's also essential to note that Paytm Payments Bank can no longer provide certain services. These include fund transfers, Aadhaar-enabled payment system, immediate payment service, Bharat Bill Payment Operating Unit, and UPI facility. This means that you'll have to find alternative digital payment platforms for these services. This ban is indeed a significant blow to Paytm's reputation and trustworthiness. But remember, it's not just about the company, it's about you, the user, and how this affects your day-to-day transactions. So, what's the takeaway here? It's that while you can still access and use your existing balance, you'll need to explore other platforms for future transactions. It's a big change, but remember, change is the only constant in life. However, the ban does not end with just the payments bank. Stay tuned as we dive deeper into additional restrictions imposed by the RBI and what they mean for Paytm and its users. The RBI's restrictions extend beyond just the payments bank. The central bank hasn't stopped at putting a halt to Paytm's core services. There are additional restrictions that have been imposed, which affect not just Paytm Payments Bank but also its parent company, 197 Communications and Paytm Payment Services. The Reserve Bank of India has instructed the termination of nodal accounts that belong to these entities. What does this mean, you ask? Well, nodal accounts are essentially accounts that businesses use to hold their customers' money temporarily before it's transferred to another account. They're a crucial part of the digital payment process. So what's going to happen to these accounts? They have been ordered to be closed by the 29th of February. That's right. The clock is ticking and the countdown has begun. And it doesn't end there. All pending transactions in these accounts have to be settled by the 15th of March. Any pending transactions after this date will be in a state of limbo, causing potential disruption for customers and the company alike. This move is a part of the RBI's larger plan to ensure that digital payment platforms adhere strictly to banking norms and regulations. It's a clear message that non-compliance will not be tolerated. The RBI is committed to maintaining the integrity of the banking system, and these restrictions are a testament to that commitment. For Paytm, this is a massive blow. The company has to navigate these restrictions while ensuring minimal disruption to its customer base. It's a tall order, but Paytm has shown resilience in the past. The company is likely to use this as an opportunity to revisit its compliance protocols, reinforce its systems, and bounce back stronger. This is certainly a challenging time for Paytm, but remember, it's the tough times that show us what we're made of. It's the hurdles that make the journey worthwhile. So let's wait and watch how Paytm turns this setback into a comeback. Despite this major setback, Paytm isn't ready to back down. The company has faced challenges before and emerged stronger, and this time is no different. Paytm is determined to rectify the regulatory lapses, address the RBI's concerns, and bounce back into action. The company's leadership has already expressed a commitment to work closely with the regulator and comply with all necessary regulations. Paytm is confident in its ability to continue serving its vast customer base, which spans across hundreds of millions of users. This is a defining moment for Paytm. It's a time for them to demonstrate their resilience and dedication to their customers. They've always been a pioneer in the digital payments industry, and there's no doubt that they'll use this challenge to innovate and improve. So, what's next for Paytm? Only time will tell. But one thing is for sure, they're not going down without a fight. Stay tuned to the Tech Science Explorer for more updates on this developing story.